Okay, MegaWhale team, welcome back to our channel. Thanks for tuning into another video today. Today's video is going to be a market analysis and technical analysis for Luna. We're going to be running through supports, resistances, triggers, demand zones, diagonal supports, you name it. We're going to be talking about a variety of different technical indicators on a whole range of different time charts, talking about our price predictions to the upside and obviously the bearish price predictions, and talking about actions and expectations in relation to the current price action. We're also going to go over a variety of different community questions, which you will see at the end of the video, and that will be it. If you do have any questions about today's video, leave them down in the comments below. And if you want to submit a question for our next community question to be featured in the next video, go ahead and do so. I also want to quickly draw your attention to the pinned comment down below. Go ahead and click read more. You can join our Twitter and our Telegram and also VIP in those links in the description. Let's dive right into the market analysis. So to start our market analysis, we're just going to go ahead and input some of our support lines, our resistance levels, our diagonal levels, as well as some ranges on the chart. So first and foremost, we have our long-term uptrending support line here, which we can see was established on the 21st of July 2021. We held through resistance in that February drop in early 2022, pushing up to a new all-time high in around April 2022. And we have actually recently dropped below this major long-term uptrending support line. This is a very significant move, and we're going to talk a little bit about this more as we go through the analysis and dive into the technical analysis later on in the video. So we have a strong resistance around 87.96 as well as 71. So 71 is a pretty significant resistance zone, and we're going to come back again and talk about the implications of this level pretty soon. We're going to go ahead and put our POC line in according to our VPVR. This is sitting around $5.36. We also have a major support line at around $17.60, $37.79, $43.24, and we have a major resistance support range sitting around $64.29 to $66. And finally, we have a major resistance to support range at 50 to 43. This is probably the most important range on the chart right now, considering we have just lost this uptrending diagonal support line. So this is the next major support block for Luna. It'd be quite unlikely to see the price bounce around within this middle range and find support. We will more likely either continue upwards from here while having some kind of bear trap, or smash right down into this range before finding support. It'll be very unlikely to see the price kind of hover around in the middle of this range for an extended period of time before making up a mind. It needs to kind of go ahead and meet some demand. So we're going to talk about some price directions, so some possibilities. Then we're going to show you some measured moves based on the macro time frame. Then we'll go ahead and dive into our technicals, where we really break down any hypotheses that we create in the next few minutes. So right now, all we're doing is based on what we see, based on the chart, based on the lines, our supports, the resistance, demand zones. We're going to quickly give you a few summaries or a few predictions based on where or how the price will move. Then when we do our technical analysis, for the viewers who are new here who don't know how this works, we'll go through and use some indicators on a variety of different time frames to either confirm our predictions or negate those predictions, and then we'll come to a conclusion at the end of the video and where we think the price is headed. So let's go through. So our first prediction is that the price continues down now that we've had a significant breakout of an uptrending support line that's lasted over a year, that we're going to head down to demand. And we know demand is in this range here. We've had some significant support and resistance throughout this range, and it's safe to assume we do have a strong demand between $43 and $50. So our first prediction is that the price comes down within this range, and this will present a nice buying opportunity. So hypothetically, you buy in this range, where would you be looking to cut your loss? Well, if the price falls below that $37.79 zone, that would be a huge trigger. We can see this has acted as a significant support and resistance on the Luna chart. If we lose that level, we would definitely be heading to 17. There is absolutely no doubt in my mind, if we lose that $37.70 range, we will head all the way to $17.60. So we have to establish one thing right now. Luna is in a downtrend. Officially, Luna is in a downtrend. It has lost its long-term uptrending support line. Therefore, we have to have our sights set on the downside more so than the upside. I'm going to go ahead and remove some of these drawings. I'm going to show you a measured move analysis on the inverted chart. So this is a measured move analysis. Now, measured moves are not price predictions. This is not a price prediction. This is simply showing you the maximum price or the lowest price Luna can reach based off the market structure. So the market structure is that we are in a descending broadening wedge. Now, a descending broadening wedge, the measured move, what you do is you take the distance from the breakout point. What we do from here is you draw a line upwards. So we're going to go ahead and draw a line upwards. I will use a trend line to do that. And we're drawing it up to the point of which the price entered into the channel or found initial support within that wedge. So we have initial support here, so I can show you. So we draw that line across and it meets downwards. Here is our target. All right, so according to the descending broadening wedge, we have a $5.36 maximum target. This means this is the absolute lowest Luna could go if this structure went full-blown bearish and dropped down for an extended period of months. Usually, measured moves do not reach their maximum target. I think if we take a look at a descending broadening wedge, it only has a 50% chance of reaching its maximum target. So even that, we took a look at the macro time frame of a year, it's probably even smaller. So I would say we're looking at targets within this range here. We're looking at targets here, and we're looking at a final target here. I think it's very unlikely we go any lower than that for now. Let's go ahead and flip it back to this, and we'll dive right into the bullish scenario. So the bullish scenario would be, of course, the price completely flips around here, and it would have to reclaim this major demand resistance zone here. This major resistance zone, as we can see, has acted as a huge resistance and huge support every time we kind of push through it. We shoot up to this massive push upwards. We've seen the last 3 times we pushed through, we've had significant rallies upwards. This is indicating a very strong point of confluence on the chart, or a strong point of resistance, if you would like to prefer it to say it like that. Whereas if we break over this level, close above this level, we could definitely see another push upwards for Luna. But like I said, we do have downward pressure. We are under a long-term support line now, and we're going to go through the technical indicators in a second to talk about the probability and likelihood of us either pushing upwards past this demand and resistance zone, or downwards into this next one and potentially lower. So we're going to go ahead and get stuck into analysis now. So to start with, I do want to start on the weekly. We're going to go through a 7-day chart, the 3-day chart, the 1-day chart, and the 4-hour chart. We're just going to go ahead and get rid of that downtrending or that uptrending trend line, and we're going to look at the chart from this standpoint. So we're going to start with our Ichimoku cloud, and what can we see from Ichimoku cloud? We can see the price has officially lost that baseline. It's lost a conversion line. The lagging span is below our major support zone now, indicating the price is most likely going to continue to drop in this free fall to reach these clouds. The clouds are sitting currently within the support range, therefore confirming the probability that we are going to continue downwards according to the Ichimoku cloud. So the Ichimoku cloud is looking quite bearish. Bull market support band, again, looking incredibly bearish. We got heavily rejected at that 76 range on the bull market support band, printing a huge 7-day candle below it, indicating a potential drop further. The Gaussian channel, again, we are above the Gaussian channel and most likely coming down to retest the Gaussian channel. Now, if we do break into the Gaussian channel, however, we will be entering down and through the Gaussian channel. Remember, the Gaussian channel, if you know how to use the Gaussian channel, when you break from the top side through, the price action enters at least to the midline, and if it breaks the midline, it ends up below the channel. So if we go into the support zone here, which is 50 to 43, we would have broken into the channel, which will send us down to this 38 or 37 cent support. And if we lose that level, we're going right through the Gaussian channel, right down to 17 cents. Again, Gaussian channel is looking bearish on the weekly. That's about all I want to show you on the weekly. We're going to go down to the 3-day. And we're going to bring up the same indicators and then run through a variety of different ones. So we'll start with Ichimoku cloud again. And again, we have a bearish crossover here with the conversion line and baseline, not looking good. Our lagging span is finding support above the clouds, which could signify some sort of bounce here. It could signify that we maybe have some kind of bull trap, but it is too soon to tell. We're going to have to assess that on a smaller time frame, which we will. Going to the bull market support band, it's going to show us more or less the same thing that we saw on the weekly, which is a strong rejection and a downtrend confirmation. The Gaussian channel, like I said, we entered into the Gaussian channel, pushing through the midline. It is more likely here that we push downwards below the Gaussian channel into this range here. And so far, so good in reference to our target, which is the move downwards to this range, which is our primary target, which we believe that is going to occur. We've had a few indicators so far kind of confirm that is in fact the case. We can see on Luna beforehand, breaking into the Gaussian channel, we always end up underneath it. All right, so we're seeing that same pattern play out again. Let's go ahead and take a look at our moving averages. So let's go ahead and bring up the 100-day moving average, and we'll go ahead and bring up the 50. Oh, we'll bring up the 50. We'll go up the 100 and the 50. So we can see that we have lost the 50 SMA in that last week, in that last 4 or 5 days, which is obviously a very bearish sign. And we're coming down to retest the 100-day moving average. So the 100-day moving average is going to act as a short-term support. We did see a period over here where we found support on the 100-day moving average. And of course, if we lose the 100-day moving average, it's going to be more confirmation that we are flipping more towards the downside. We're going to go ahead and bring up the RSI and the MACD next. And the RSI is signifying that we do have this major downward sloping resistance on the lunar chart. And this is just a huge bearish divergence, guys. And it's obviously not looking good with a recent breakdown of this recent low. I'm going to go ahead and draw this trend line in. You can see the RSI breaking down through this recent low. We do have support all the way down over here at that 33 point, which is where we're probably most likely going to be heading down, which would end up resulting in Luna heading down into this gray box, which is that $50 to $43 range. So I think we've done enough analysis. I think we're going to go ahead and skip the 1 day. I think I'm pretty confident in the analysis we've done so far. I think we're getting enough data, and there's just overwhelming bearish data here. Usually at this point, I would extend to a daily, but there is just overwhelming bearish data right here, and I just don't feel the need to explain the same things on the daily. What we will do though is we'll go to a 4 hour and take a look at the small time frame. Just take a look at what this breakdown is showing us, potentially even going to a smaller time frame to see if we can identify any market patterns. And I can't see any market patterns. We do see a potential descending wedge. Again, not a confirmed descending wedge. We would need well, even a descending broadening wedge we can see, but we would need a little bit more validation. We've only got really 1, 2, 3 points of retest, so not enough to confirm any kind of market structure. Again, we'll have to let this market develop a little longer and let this price action play out a little bit further before we can assess the current price action based on any market analysis. What we can do, however, is look at the RSI and look at the MACD, take a look at the momentum and volume, and see if this downtrend has any strength behind us. So let's take a look. So we'll get rid of that one. We'll go ahead and bring up the MACD as well. And the MACD and the RSI, what are they telling us? So the RSI isn't telling us much. It is telling us we're kind of pushing through oversold territory, and this is a bearish thing. When we see the price drop, all right, go into the oversold territory, push back upwards, and then remain above this 30 point, but the price is continuing lower, it means we have this layering of selling pressure. We have this layering of bearish selling pressure, and it's basically extending or explaining we're going to see a continuation downwards according to the RSI. So the RSI is indicating that we have not finished this drop yet. The drop is not over. If I guarantee you go to the 4 hour chart, we can see just that. Yep, we can see just that. We haven't got any confirmation yet that the RSI is in fact printing a buy signal. As long as we remain under 30, we are going to be continuing downwards. If we break over 30, we can see a potential move upwards, all right? So a buy signal on the RSI will occur when the price breaks above 30. Cool, guys. So I think that's probably enough analysis for now. I think that's kind of pretty done a good sum up for the video and in regards to where we think the price is headed. Just a quick summary. We do believe the immediate price action is very bearish. We've done a variety of different analysis techniques on our indicators to suggest that the macro and the short term is in fact bearish. We have our invalidation point, which is a break and daily close above $66.11. And if we push above $71 and get a daily close above that, that will confirm a move upwards. For now, the recent and more likely price action will be letting us continue down into this support range, which is around 43 to 50. And if we lose the 43, we will definitely see 37. If we lose 37, we can see $17.60 as a potential absolute low for Luna. So that is done for the video. I'm going to go ahead and introduce Bitget, and then we're going to go ahead and talk about our community questions and answer a variety of questions that we have had submitted from our users. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. So the first question, I'm going to bring it up on screen here, you should be able to see it, is from Jan L. He asked a question a few days ago, so thanks Jan for submitting another question. It's always great to be answering your questions. You recommend, so what would the plan be in the bear market to buy? So you want to know what to buy. So do I recommend to buy low market cap coins, or would you prefer buying the usual suspects such as Luna, Ethereum, and I assume you're referring to higher market caps? I'm pretty keen in low market cap coins, which they should make more profit when it goes up. Am I right? So you are completely correct in the sense that lower market cap coins will make you more money if they go up. But this is the thing. When you're looking at investing, you have to consider your risk tolerance, which is a really, really important factor. So we'll go up over here. You have to consider a few things. First one is, risk tolerance. Actually, we're going to type it out. We're going to type it out over here. So we've got risk tolerance. We have capital, and we have risk management. We'll just write risk man. So those are the 3 things that will determine whether or not you're going to go and put your portfolio in high caps or low caps or a mix. All right. So if you have a really, really high risk tolerance, meaning that you're able to risk a lot of money, or you're happy to risk a lot of money, you would be much better off investing in low caps, up and coming projects that you've done extensive research on, that are under 50 million market cap, that have the potential 20, 30, 40, 50, 100x. Yes, in those terms you will make a greater percentage profit and you will have a higher return on investment. That's completely correct. Your ROI will be much, much higher. Yeah. But your downside risk, the risk number 1, all right, this is where the risk tolerance comes in. It might be a new company. It might not have a lot of funding. It might not have a very well established team. It might be some kind of extension of another project that's already well established that really doesn't have any leverage in the market, meaning it's not ever going to really get massively adopted. It could be a scam project. It could be a whole variety of things that kind of prevent it from moving upwards. It could also not have access to being listed on many exchanges. The token economics could be skewed in a way that would negatively impact investors' interests. So there's a whole range of things when it comes to low cap coins that you have to consider when you're investing. On the flip side, your capital investment. So I'll go through capital investment next. If you have a very, very large capital, you could probably risk a small amount of money on those low caps. So if you've got a large capital and you're putting about 1% of your capital into these low caps each, then that's a perfectly viable risk tolerance. I would never put more than 1% of my entire capital into a low cap coin or a coin that I don't really have a lot of faith in general, particularly if you're looking to hold it from the bottom of bear market. Now, for someone like me who's got quite a large portfolio size, 1% of my portfolio is still a significant amount, but it's not an amount if I lost that would break the bank. And it is also that happy medium, whereas if it went up 100x, I'd make a significant amount of money. Whereas someone who potentially has a portfolio size of $1,000 or $2,000, they shouldn't really be touching low caps coins just because the risk of loss is way too high, and they're more likely to experience FOMO or get lured into the fact that the rate of return on these investments can be so huge, they can almost trick investors into putting too much money or overexposing themselves to it, and they end up getting wrecked. And finally, risk management. Generally, when you're buying lower cap coins, the slippage is going to be higher, meaning the difference between your purchase and your order price filling. So you could potentially buying at like a 10 or 15% slippage. And same thing on the downside, when you're selling, the slippage is going to be quite large, as well as the rate of which these coins fluctuate is very extreme. You can see these coins fluctuating a few percent every minute or so, which if you don't have high or a very experienced degree of risk management, you can definitely get shaken out quite fast and quite easily. So that's our low market cap coins. We're going to go ahead and talk the high caps. So high caps is essentially the opposite. Generally, the high caps have a more stable team, a really good track record. They've got a lot of chart data that you can analyze and inform your decision making, especially for someone like me as a technical analyst, a market technician. I basically I absolutely rely on past historical price action to infer decision making. If I don't have any chart action, if I just go ahead and look at a brand new coin where it's got pretty much little to no chart action, little to no in my opinion, 6 months, it's very hard for me to make any informed decisions where I think the price is going beyond speculation. And speculation is another one of those big things I want to go ahead and chuck back in. There's a low market cap coin, speculation. But going back to a high cap, good team, solid fundamentals, probably got a bunch of partnerships, got a high amount of funding, has recently performed well, and historic price action is a predictor of future price action in regards to technical analysis. So it is overall going to have a lower ROI because it's a higher market cap and therefore less money can flow, or the difference between your purchase price and the market cap at your required take profit point will be significantly higher in terms of monetary value, but in terms of percentage gain, it'll be less, therefore your ROI will be less. But your safety and security investing in a high cap is much greater. The price fluctuations are lower, the slippage is lower. Overall, it's a much more favorable investment if you have a smaller market cap, or if you're potentially newer to investing, or your risk tolerance is very high. And you can have a very large capital and an extremely good risk management and still have a small risk tolerance. Take me, for example. I have quite a large capital, I have very, very tight risk management, and I have a very small risk tolerance. I don't allow myself to risk more than 1% of my portfolio at any given time. And I stay away from low caps. So Jen, I hope that answers your question. It was quite an in-depth analysis on that one. But let me know if you got any more questions about that. And for every other viewer watching, I hope Jan kind of posed the question maybe you were thinking about or you were considering. I hope that kind of answered it for you. And the next question, we're going to go ahead and bring it up on the screen here, is from PP. He asks, on this drop, should we dollar cost average into Bitcoin first and then leave the altcoins alone, or do we get into Bitcoin as well as alts? So it is exactly the same principle as here, P. It's basically the same thing. We're just going to change this high cap to Bitcoin and the low cap to altcoins. And then now you can apply exactly the same principle. You can eliminate, the only thing you would eliminate is the fact that this could potentially be a scam, or it could be a low market cap coin or whatever. But if you're referring to Bitcoin and compared to already substantiated or already proven to be legitimate and well-performing altcoins, then you can use the same analogy. It all depends on your risk tolerance, capital, and risk management. As for dollar cost averaging right now, it is overwhelmingly obvious that the market is not doing well and is going to continue down. It is overwhelmingly obvious that the entire global economy is not doing well and will most likely continue down. Yes, we might have short-term fluctuations upwards. Yes, people will FOMO in. Yes, it could be a bull trap. Yes, you could be, I guess, more inclined to invest when it goes upwards compared to now. But you have to realize the macro and macroeconomic situation is not cultivating a positive growth environment for risk assets. So I would suggest not to dollar cost averaging right now. I would suggest to wait. There are better dollar cost averaging positions regardless of whether you want to buy alts or Bitcoin. And I would wait for a trend confirmation and then start dollar cost averaging when the trend has flipped. It doesn't mean you're buying high. It just means when you're buying, you're confident the price will continue and you're buying slightly in slight increments as it goes up, rather than as we continue downwards. Because you could buy now and it could go down 50%. I know that the whole point of dollar cost averaging is buying as the price decreases, but in terms of risk management, dollar cost averaging is a pretty measly, in my opinion, a pretty horrible thing to do, especially when we're potentially entering a long-term bear market. So I would say sit on your hands, take a step back from the market. Don't be so rushed to invest, and you don't need to feel like you need to buy these prices. The reality is the difference, if you're going to buy Bitcoin now or Bitcoin in a few weeks, or even you buy Bitcoin at 40,000 or Bitcoin at 30,000, at the end of the day, the majority of your profits won't be coming from holding Bitcoin. You should be focusing on trading during bull market cycles and holding a substantial, well-performing altcoins to get those profits. So I hope that answers your question. The summary with that one is, dollar cost averaging, is it beneficial? Yes. Will I be doing it now? No. Do I suggest you do it now? It depends on your risk tolerance, capital, and risk management. So if you have a capital of 100% all in USDT right now, probably I would suggest investing a small amount, buying a small amount. But if you're down like 50-60% of your investments, you got a very small risk tolerance and you don't really want to lose more money, it probably isn't the best bet. All right, thanks guys, I hope you enjoyed the video, and I do want to just quickly mention that our Crypto Academy course is launching in 7 days, 1 week from now. If you want more information on that, head over to the message in the comment down below, the pinned comment down below. You can contact via email and you can learn everything we know from me, myself and Wheels of Crypto have collectively come together and created a 10-unit trading course. It contains everything that I talk about in a video like this. By the end of the course, you would actually be able to do an analysis like I've shown you today. These analyses are quite pretty in-depth but straightforward. I do a lot more in my own time and privately that I don't put on the videos. I do a lot more behind the scenes, but an analysis like this, which is very much effective at predicting macro trends, potential entry points, and trading signals, at the end of a 10-unit course, you would actually be able to do a similar video and understanding as I show you in a video like this. All right, guys, with that being said, I'll catch you in the next one.